FIT Talks is the Fashion Institute of Technology's oral history program, directed by Karen Trivett, Head of Special Collections in the library. My name is Phyllis Dillon. Today, June 26, 2019, we are taping in the university's library with Michael Stanley, the Managing Director of Rosenthal Rosenthal, a leading commercial finance company specialized in factoring, asset-based lending, and purchase order financing. The firm was established in 1938 by Imre Rosenthal, and its first customers were primarily textile and apparel companies. Since then, it has also helped to grow businesses in other industries, such as transportation, oil and heating, food and beverage, and manufacturing, and has about 500 clients nationwide and a staff of 200. Mr. Stanley has been with the company since 1998 and is regarded as expert in his field. He serves on the Educational Foundation of FIT and on the board of Big Sisters and Big Brothers and other nonprofit organizations such as the Needlers Foundation, the Fashion Service Network, and the Commercial Finance Association's Executive Committee. Welcome, Michael. I'd like to start with maybe you giving us a brief history of Rosenthal Rosenthal and how you ended up there.
Certainly. So thank you, Phyllis, very much for this opportunity. I very much appreciate it, and hopefully I can share some of my experiences with you and your listeners. So this is great. So Rosenthal Rosenthal was a finance company, was established in 1938 by Imre J. Rosenthal. His father, Andor, was the contributor of the capital, and Andor was not in the finance business. He was in the children's wear manufacturing business. And his son, Imre J., or as he was commonly known to his friends as Jimmy, chose to start a finance company. And back then, there was a broad array of finance companies, and they were servicing the apparel industry that was at that time, was very vibrant and growing in and around New York City. So that's really the foundation of the company, and it has a very rich history and legacy because they've been in business now for almost 80 years at this juncture.
And are family members still involved?
Yes, we have a number of family members still involved, and they're active. And Peter Rosenthal, and his cousin Ken Kleiner, and his sister Cassie Rosenthal, and they're very active and they're dedicated, and they're helping carry on the tradition of their grandfather and their great-grandfather. So it's a very interesting dynamic, and it's great. Sure.
Yes. Mm-hmm. So can you explain why the apparel industry needed a special kind of companies called factoring companies? Sure.
So factoring as a business model goes way back, and it goes back really before basically pre-Roman times. And it's referenced in old history, and in Shakespeare there's a reference of factoring companies. But really it sort of became much more active during colonial times, whereby, of course, here in the colonies, we needed product, and what factors did was they imported the product, from, of course, predominantly England, to the States, and to the colonies, of course, at that time, and they acted as importers. They acted as the custodians of these products, silverware, linens, of course, at that time, and they arranged for the sale, and they guaranteed the purchase of those products. And that's really where it sort of got more activity during that time period. And of course, it still remains a very viable financial service today. And by industry reports, it probably has a turnover, annual turnover of approximately $100 billion rather, annually. Yep. Mm-hmm. Yeah.
And is this because it is a more nimble financial resource?
It is, because really the fundamental process of factoring is in a factoring institution, what they do, they actually purchase the accounts receivable of a company. And from that, once they purchase it, so they own it, so they have the ability to lend against it, to make an advance against the receivable, and then to manage it in the sense of they perform a collection effort, they perform the bookkeeping functions, and they guarantee the underlying credit particularly of these retailers that actually are the buyers of the product. So it really works very well in predominantly consumer products in that industry. Mm-hmm.
Okay,
Yeah.
so why is it predominantly for consumer products?
Because when you walk through, as an example, a Macy's, those beauty products, the footwear, the consumer electronics, the apparel, there's a large proportion of those products are being financed by factoring companies. Because as a business tool, it really does work. It really does work. Because what happens is for a shoe manufacturer, right, that wants to sell to the department store chains and the mass merchants and the specialty retailers, they would otherwise have to maintain a large department to analyze the creditworthiness of their customers, to perform the collection activity, to handle all the bookkeeping administration, and then of course have the ability to run out and borrow money from a banking institution or other. So all those services are basically bundled in this word called factoring, and that's really what it is. Yeah.
So this must give you a very intimate relationship with a lot of small, mid-sized, and also large companies?
Sure, yes. So we have medium-sized companies, we have some small emerging companies that come to us and they require financing. And yes, they're basically, when we become a business partner with these companies, we have a very intimate relationship with them, because it's not only we lending them money through the advances against their receivables and of course other assets, inventory, equipment perhaps, trademarks have value. We're giving them financing on those asset classes, but on top of that, we're managing their receivables, who to sell, who not to sell, when to stop selling a certain customer because it's running into a financial trauma. So we become very close to them, and and I think we have this very nice relationship in most cases. Yes.
So that must mean that you have a very broad overview of a lot of the industrial activity in a certain part of the economy. At least this part of it.
We do, because our activity not only extends to the people we're lending money to, of course, and we see on a daily basis how they're performing, but on top of that, we also have a reach to all the retailers, because all the retailers are relying upon us to extend credit to them, to make sure they have enough credit availability to buy all these products. And yes, so it's an interesting dynamic. And yes, we see, of course, in different verticals, in furniture, which we have a lot of furniture manufacturers and footwear manufacturers and designers and the like. So we see the whole spectrum from luxury products to mass products. So we see on a real-time basis really what's happening. So it's very insightful.
Yeah, I read that you have offices across the United States,
Mm-hmm.
and that the firm expanded to California.
Yes.
Before going to California, were you dealing with companies already out there?
Yes, we were dealing with companies in the West Coast, and because they needed our services. And then from there, over 10 years ago, we established a first branch office since the founders started in 1938, and that office grew and continues to grow because there's a very vibrant consumer product market in California. Why? Because of the continued escalation of imports, a lot of the products come in from California, and it's a great place to live. Sure. So that's been exciting for us.
Yeah.
Yeah.
So I guess in your career at Rosenthal and Rosenthal, you've seen quite a bit of change in
Yes.
the nature of these relationships. You know?
Sure. Yeah. I have, and I do want to talk about that, but also after our success in California, we had an opportunity last year to acquire another factoring institution that was owned by a bank, and that was based in Atlanta, Georgia. And we made that acquisition because it put us into another vertical, not only geographically, but also and they catered predominantly to furniture manufacturers, to home good manufacturers, and to floor covering manufacturers as well. So it gave us the reach into that market, and that's been exciting for us as well. Yeah. So, but to answer your question, yeah, you see that things are ever changing, and we saw that in the downturn in 2009, 2008. There was a very interesting dynamic in the sense that we went through a financial recession, but it was coupled with a credit crisis. So a lot of these companies that otherwise were able to get financing no longer had the financing because predominantly most of the banks had restricted their extension of credit. So it was an interesting time for us because it was able to, it inured to us in the sense that we were able to grow our business significantly because these companies needed financing, and since we are a non-bank, we don't have the regulatory restrictions that a bank does. We were able to continue lending to our existing clients and then take on new clients. So our company did grow significantly after that period of time. Sure.
Right. One thing I've come to perceive is that the apparel business really is a community. You know, it may have changed quite a bit from, you know, the period when it was made up of a lot of small manufacturers.
Correct.
Who were wholesalers.
Yep.
And there were hundreds of department stores, and there was a kind of stability and I guess pattern of interaction.
Mm-hmm.
So that has changed, right?
Correct. Yes.
Right, with foreign manufacturing and
yes.
these long different supply chains. And
right.
So, but I gather that the industry still maintains a sense of community because of somewhat of the way it's structured. Because I noticed when I Googled factoring, you know, that I saw a lot of conferences where factors were giving talks to people mm-hmm. about department stores and a lot of networking.
Yeah.
So, can you speak to that?
Sure.
I don't know if people don't usually think of industry having so much networking. You know.
Yeah, in effect, it's a small club. I can answer it two ways. I can tell you about the factoring industry. So I think in 19, and I just looked up these numbers recently, in 1986, there was something like 15 factoring companies. Today, there's a half a dozen. And about half of those, about 3 of the 6, are bank-owned and the other ones are non-bank-owned, including us. It's not that the industry, as far as factors and their activity has shrunk, just the number of players has narrowed, as is the number of vendors, apparel vendors, right, that sell to all the various department stores. And I think that dynamic has really accelerated after 2008. So you have to be a certain size to have a viable business and a sustainable business, because you have to have a certain bandwidth, a certain platform to be sustainable today. And it's interesting because all our client base, as far as number of clients, our clients actually became, after 2008, became bigger and stronger through that process. It was a very evolutionary process that either they had to get smart and restructure their businesses, or go out of business, or merge, or be acquired. So it was very Darwinian during that period of time, and it was very interesting to live through and to witness all this change. And the change, by and large, was a positive change for most of these people that are still in business and thriving to this day.
So how does a young person who's ambitious about starting a company, how do they learn about this kind of thing, or does everybody know about this when they sort of set out?
As far as the financing?
Yes.
Well, it's generally commonly known, and in many cases, if you are in business and you are emerging business, in most cases, either you could learn about it on your own, or in most cases, you're professionals. You know, the attorneys, your accountants, and if you are, starting the business, they're going to say, okay, fine, let's set you up with a factoring institution that will help you grow your business, and the formulas that we use fundamentally self-correct as a company gets larger and grows, or goes through some trauma and doesn't grow so much, yeah, and needs financial help. So, but it works, and today it remains really one of the best commercial bargains, for a company, that they can borrow money, they can service their receivables, and make money and be happy.
So, it's very interesting to sort of be on the inside, have an inside track in all these different companies.
Phyllis, it's so much fun. Okay. I get to go to fashion shows. I get to meet with these designers that are, in many cases, they're really fantastic artists, and they're developing new product, and they hope that the consumers will buy from them. So it is, or dealing with a situation with this rapid growth and they need money to grow their business, or conversely, a company that's hit a speed bump and they need some help in restructuring, and how do we figure it out and get them back on track and on their merry way. So
does this explain what drew you to this profession? Initially, I mean, how did you, I believe you have an MBA?
I do. Actually, and frankly, it was when I was graduating student for undergraduate, I frankly needed a job. Oh. And I had a degree in business administration, and I found my way into this very unique industry. And I worked at that time for a company called United Factors, which is no longer in business, and they were owned by United Merchants and Manufacturers. And they also they owned a retailer that you may remember, Robert Hall. Well, Robert Hall unfortunately ran into some financial rough weather and filed for bankruptcy, and caused the whole entity to file for bankruptcy. So the factoring division, or subsidiary in that case, was sold to a bank, and then it started the process of this continual narrowing of the players in the factoring business, and that was in the 70s. Yeah, I needed a job, and I found a job. And I basically stuck with the industry really since undergraduate college. Yeah, so go figure. Yeah, but it's been a lot of fun, this journey.
Yeah. Not everybody can say their job is a lot of fun.
Yeah, listen, we all in life have bad hair days, but generally it's great. You meet a lot of very interesting people, all type of people, various industries, and it's a very, it's still continuing to undergo very rapid and change in our industry. So it's been exciting.
So you want to talk a bit about that? I mean, I guess since online shopping has had such a great impact on the retail environment.
Sure.
You must have to have a deep understanding of even that and how people can survive in that environment.
Yeah, so what's happening is, so the retail environment we have in the United States, we have a lot of retail stores. We have per capita more square footage than any other place in the world. I mean, the US has today some 24 square feet of retail space per shopper, right? Canada has 11 square feet. England has like 4. Germany,
really?
yeah. So we have just far more retail space than we probably need. So what we're seeing a contraction of that retail space. People, narrowing their footprints. Large retailers are closing stores, or we're seeing more bankruptcies, and we'll continue to see bankruptcies. And we've seen them over the last couple of years. We'll continue to see more this year of companies that are, retailers that are struggling and will not make it. And what's happening is a traditional retailer is being squeezed by number one, their retail, by consumers buying online, and then the growth of fast fashion. So they're squeezed, and by those two issues, so it is. Nonetheless, we still need stores, and there are certain retailers that have a platform whereby, yes, they have the brick and mortar, and then plus they have the ability for a consumer to buy from them online. So those stores have, certainly made those changes, and migrated to that omni-channel platform, and they continue to do that. So the more successful ones have a very successful omni-channel arrangement for their consumers.
So omni-channel means a combination of brick and mortar and
online shopping. Yeah, sure. Yeah, and it gives the consumer to either, buy in the store or buy online or return to the store, and so that has that option for them, rather than just as a purely, a website where they can buy on the site and then have to return product directly to, their warehousing facility. Yeah.
Right.
Yeah.
Okay, I think we've covered a lot of territory. Are there other things that you would like to?
Yeah, I mean, I could tell you that, as a financial institution, we constantly have to evolve and look for new ways to finance companies. So we're seeing, emergence of companies, as I just mentioned, that just merely sell direct to consumers. So they'll have a website, they'll have a brand. They don't have to, they don't need brick and mortar, but they have to attract their consumers. So there's a certain cost for them to gather their consumer interest, and but they still need financing, so that we were able to provide financing rather than just financing receivables, since there's really no receivables per se. There's just merely consumers that go online and they'll pay with credit cards, PayPal, and the like. Yes. So we're able to finance that business that they handle, in direct to consumer business. Yeah, and most of our clients now have not only their, their wholesale business where they're selling to the retail stores. But they have also their own retail stores, which is helpful for their own brand. And then plus they have a website, or they sell to an entity that has the capabilities of selling direct, to consumers. So yeah, so we have to look for new ways to get them financing, and we do. Yeah.
So it's very stimulating. The environment, I gather, is probably very, very stimulating.
Yeah.
Nowadays.
It is, and you have to anticipate where we foresee, a problem ahead and know how to navigate through it and try to act responsibly. Sure, yeah, and not overreact. So in many cases, we have a situation where companies do go through a transformation and they need to have help. And sometimes to correct some of the things that have happened to the company, it could take, it takes a long time, sometimes years, to fix an issue that they're having, whether it's overhead or expense containment. They've gotten themselves into a glut of inventory that unfortunately didn't sell, and they have to wean themselves off over that case of inventory indigestion. And sometimes it takes a long time. Yeah. And we try to, as best we can, we try to be good partners with them and understand what they're doing. And there's really no specific cookie cutter solution. We have to jointly figure out a workable solution for these problems. And it could be stressful or it could be a lot of fun. Yeah.
Is this model mostly just in the United States, or are there similar models in Europe?
Yeah, there's also a very vibrant factoring network in Europe, and it's interesting because we have certain people, our clients, that also sell into Europe, or sell into Asia, sell into the Middle East. So we partner with these local factoring companies to manage their receivables in Dubai or in Italy or in Germany and all these other places. So we look to them, and vice versa. They look to us when they have one of their clients that wants to sell to the US of A. So there is a network, and we do engage with them.
That's very interesting.
Yeah.
So you have a global outlook from
Yeah.
a certain
Sure.
sense.
We do.
It's not only having to be an internationalist from the supply side, but also from the,
The distribution side. Yes, of course.
Side.
Yeah, sure. Yeah.
So I guess to sum this up, I said, is it really one world that we're living in now, in essence?
We're living with a flat-ish world, Phyllis.
Flattish world.
Yes.
That's how you describe that?
Yeah, it's true. Yeah. Yeah. And because of electronics and our platform, it does work, and we've enhanced our data platform so our clients can interact with us electronically and remotely. And we have an app now that we've developed that they can go on and for their smartphones and see what's happening with their account, or if they want to explore if they can sell a customer that they've run into. And yeah, so we have to be transparent with them, and we have to be able to give them the data, and make it very quick and accurate, and that's what we're constantly doing, is trying to update that platform.
Well,
and it works.
That's very, very interesting.
Yeah, yeah.
Thanks very much for your time today.
My pleasure.
I have a question to insert about the service to the FIT Foundation Board.
Yes.
Could we ask a question about that?
Yeah.
Sure.
Yes.
Okay.
You serve on the foundation board of FIT. Could you talk about that?
Yeah. So I've been a foundation board member for the last about 10 years now. I've lost count. And it's a great board, and it has some really fantastic people on the board, and it's great to interact with my fellow board members, but of course, to help out as best we can the college and to work with Dr. Brown and her staff. And it's been a lot of fun for me and very rewarding. And, you know, as I mentioned, I think, you know, we help out as a finance committee and manage the endowment. It's been very, very rewarding. It really has.
So you have an overview also of the educational, you know, basis of the apparel business itself.
Yeah, but it also extends to beyond just apparel to,
you're right.
you know, to, of course, design, jewelry, home furnishings, design, you know, interior design, you know, photography. And it's great. And all the things that are happening to the sustainability movement, which is very exciting, and the like.
Yeah.
But, you know, yeah. And like myself, along with my board members, we truly believe in the transformational ability of education, and how we can, you know, hopefully, you know, continue to, you know, educate students, and hopefully we have a very high success rate as far as graduating students. It's in the 90s that most of them, of course, you know, obtain employment, and we're always looking to help as best we can. Yeah. Mm-hmm. Yeah, and it's great.
That's great.
Good.
Thank you very much for your time today.
Phyllis, this has been a lot of fun, and I really appreciate the opportunity. Thank you.